Well, good day, smart traders, and welcome to another weekly market review. During this session, we are going to have a quick look at everything that happened during the past week. As in addition to this, we are also going to have a look at a few trade setups that we can benefit from in the week ahead that will definitely assist each and every one of you to profit from the market. Last week, we shared 3 different trade setups and different trade analysis. And if you traded these based on that analysis and based on those certain support and resistance key levels that we did indicate, you could have generated somewhere between 700 to about 1,000 pips in profit, especially on the oil trade that was shared. That was an absolutely beautiful setup and definitely generated a massive amount of profits for a lot of our traders during this week that has passed. So that being said, if you haven't done so yet, kindly just like and subscribe to this channel. So like the video, subscribe to our channel, and comment your thoughts on this video as well. Let us know what you think and let us know which content you would like us to show you in the future. So let's get started. Let's get into this. Let's have a look at what happened during the week that has passed. We saw earlier this week on Wednesday that the Federal Reserve Chairman Jerome Powell actually stated that it will actually make sense to moderate the rate of increases and that smaller rate increases are expected in the next meeting, while warning that the fight against inflation is not over. And I think that is something that we need to pay close attention to. The markets are now pricing in a 50 basis point hike for the Fed's meeting that is taking place in December. And if you are unsure about the date, the interest rate meeting is taking place on the 14th of December. Now, this 50 basis point hike is obviously a massive decrease from the 75 basis point hikes that we have been experiencing over the past 3-4 months. Now, despite the signaling of this downshift in rate hikes and the rebounds in markets, we saw an increase in stock markets, we saw an increase in gold, we saw an increase in silver, we saw an increase in most of our metals. We also saw an increase on oil. But despite all of this, certain macroeconomic conditions do not favor a sustainable market rally, and we could see some serious pullbacks in the near future. And this is because the impact of the prior interest rate rises will continue to weigh on the economy's growth and corporate profits in the near future, which leads many to believe that there are still chances for the US economy to enter into a recession. And this is likely to be the base scenario for all trading going into December. So now that we've covered that brief overview of everything that happened in the market this week, let's have a quick look at our economic calendar for all the events that took place that actually shaped our trends and our movements during the past week. We started things off in the beginning of the week with a Canadian GDP report that created some great trading opportunities. We also shared that fundamental analysis on our trading channel. By the way, if you are not on our trading channel yet, kindly get in touch with us. Our details are in the description below. On Wednesday, we also had the consumer confidence report that created some fantastic trading opportunities. As this one came in nearly exactly as forecasted, we saw a drop in the actual reports. So it dropped from that 102.5. Yes, the forecast was 100 flat, but we came in at 100.2. But this still had the same effect. We saw a good sell-off in the market, and this created some nice trading opportunities for us from there onwards. We did, however, on Friday, probably have one of the biggest rallies after Jerome's speech on Wednesday that took place around about 8 o'clock South African time. And here we saw that NFP, so that is our non-farm payroll report. So the forecast for this report was 200,000 new jobs created during the month of October. And this actually came in at 263,000, which was obviously fantastic news for the dollar. And we saw a massive rally during this specific report release and a few hours after that. And then we also saw a pullback in the market As traders then started discussing and, analyzing and saying, well, there is still smaller interest rate hikes coming and they're not going to be as aggressive when the decision is going to take place. But we still need to understand, and this is just my opinion, is that I believe that correction was a bit of an overcorrection, because the fact that, well, if they're still increasing interest rates, it's still going to weigh on the economy. Even if it's just 50 basis points or 25 basis points, as long as that interest rate is going up, it might not be as aggressive, but it is going to weigh on the economy. And this is going to show a decline in stock prices. And this will obviously affect our indices. And this is going to affect metals like gold, silver, copper, etc. And this is also going to weigh on the oil market. And this will definitely, from a Forex point of view, still see a great increase in strength in the dollar, in my opinion. But at the end of the day, we can only trade what the market gives us and not our opinion of it. So let's have a look at some analysis. Let's have a look at what happened during this week and what we can expect from the market in the week ahead. Starting things off with Euro USD. Now we can obviously see here that during this week, Euro USD actually had a very, very nice rally, bouncing on those dynamic support levels, that is our EMAs that are showing on your chart at the moment, and pushing up to, really nice high points. We saw the biggest decline in the dollar in about 12 years. So if you're looking at how much it declined during 1 month, and here we can see that it closed off the week around that 1.054 level. Now, from here on, we can actually see that next resistance level is that 1.06 flat level. And for me, I'm going to wait for it to get to that point. If we see resistance in the market on that specific level, then we can start looking for sell-offs and start seeing to short this specific currency pair. However, if this breaks and that resistance then becomes support, then we are definitely going to look for buying opportunities beyond that 1.06 level. But where the market is currently now, I'm just going to sit and wait for the market then to indicate in which direction it would like to go. Moving over to our commodities, here we can see here we have crude oil. This was probably our biggest trade for last week. Bounced perfectly on that channel as expected. If you didn't get in at that low point, you could have gotten in at that support around that $67 a barrel level, trading it all the way to that $82 a barrel level, exactly as expected. And here we could see a massive pullback in the market that actually took place from there. But very interesting to note on oil, and this is just something to also keep in the back of your head, is the fact that we actually have a OPEC Plus meeting taking place this weekend. It's taking place on Sunday, which is tomorrow. So although we saw earlier this week a massive plunge in crude oil stockpiles, and that plunge was about 13 million barrels, the most since 2019, which, yes, created that rise in oil prices. But we also saw that the strikes that are currently taking place in China is creating serious headwind, because the fact that, well, from a demand point of view, we were kind of counting on the fact that, well, China is going to start pulling back on their COVID restrictions, and this will lead to greater demand for crude oil, and this would have led to, massive increases in the crude oil price, which would have created some nice trading opportunities. Now, because of the fact that there's so many strikes taking place, this is, creating a little bit of headwind for this specific commodity, and this is now creating that it is not increasing as drastically as we thought it would. Now, based on the meeting that is taking place on Sunday, which, as I said, is tomorrow, from there we can now see, okay, are they going to decrease supply as they wanted to? And if they do decrease the supply, then from Monday we can definitely look for some buying opportunities again. We might actually see the market open with a gap if that is what happened. But if they are not decreasing the supply of oil, that can obviously lead then to the price of oil continuing to decrease, as we can see on the chart on your screen at the moment as well. that it has found resistance at that $82 a barrel level. So for me, I am either going to, see if it does push up back to that resistance level. If it shows rejection again, then we can see sell-offs down to $6 a barrel level, and then continue selling from there. But if they do decrease the supply of oil, then we'll probably see a break of that $82 a barrel level, and then we can start looking for those continuation buys up to that $87 a barrel level and beyond. Finishing things off, having a look here at NASDAQ. Now, NASDAQ as well bounced all over the place. On Wednesday, we saw that absolutely massive spike after Powell's speech, because of the fact that there was a great, risk on sentiment within the market once he actually announced that there was that decrease in interest rates. But then we did see that we bounced all the way up to that $12,000 level, and that the market then started finding resistance. The market did pull back from there based on the NFP report, but as we stated, there was a rebound afterwards up into market closed, and we closed the week off at 11,960. Now from here we can see, and this is the trade that I'm going to be looking for, if we continue to find resistance around that 12,000 level, then we can start looking for sell-offs down to that 11,700, 11,600 level. And if that support level gets broken, just continue back down to that 11,200 level. Should, however, that 12,000 resistance level be broken, then we are definitely going to look for new long positions, new buys, and trade it up all the way to that 12,500, all the way maybe to 13,000 level, and then see what the market does from there onwards. Traders, I trust that this market analysis and brief review of last week will be assisting you in your trading going forward this week. If you haven't done so yet, please smash that like button. Let us know what you thought of this video. Let us know what you thought of the content. And if you haven't subscribed to our channel, please do so. And may you all have a fantastic week ahead. Enjoy your weekend. And as always, may the peace be with you. Cheers.